Does your bio read Wanderlust? Are you planning an international travel for the first time? Does the thought of taxes send a chill down your spine? I'm here to make sure otherwise, so you can focus on your Wanderlust. Hello guys, my name is Jay Desai. I'm a chartered accountant and a content creator. I've been helping Indians spend their money better for a long time. So I thought, why not help you travel better too? So on this episode of Neo Knowledge series, we are going to talk about three things. 1. The different types of charges and taxes that may apply to international transactions while traveling in foreign countries. Number 2. Ways to save money on such transactions. And number 3. Tips to plan your travel better. So without any further ado, let's start with the video. First, types of charges and taxes on foreign transactions while traveling. There are two main types of charges and taxes that may apply to international transactions. First is foreign exchange charges. This can again be divided into two parts: currency exchange charges and forex markup fees. Let's first discuss currency exchange charges. Let's suppose you are going on a trip to the beautiful city of Paris next week. So obviously, you will need some euro so that you can spend in cash there whenever required, right? So you go to a foreign exchange dealer like Thomas Cook or Book My Forex. Now when you go there, you see that the buying rate of euro is, let's say, rupees 90 and the selling rate is 92. So when you give them a euro, they will only give you 90 rupees. And when you buy a euro from them, you will have to give 92 rupees for the same. The difference of 2 rupees here is essentially the currency exchange charge that you are paying to get your rupee cash converted to euro cash. Now let's discuss forex markup fees. Forex markup fees are charges that banks and credit card companies apply when transacting in a foreign country. These typically range between 1 to 3.5% of the transaction value plus GST on cross-border payments, which may not seem like much now, but can add up very quickly, especially when you don't know this in advance. Now, there is a simple hack to avoid paying this, but we'll discuss the money saving tips later in the next part of the video. For now, let's move on to another type of charges that you should know about, that are taxes. Currently, if you book a foreign trip through an Indian tour operator, there is a TCS that is applicable at the rate of 5% on the entire tour package. For example, if you plan a trip to Europe with a total cost of rupees 3 lakhs through a local travel agent, the agent will be obligated to collect a TCS of 5% on the tour package. Consequently, you will need to pay an additional amount of rupees 15,000 as TCS when booking the tour. On this, there is no threshold of 7 lakhs currently. Even if you spend below 7 lakh rupees, TCS of 5% will be applicable. Also, if you purchase foreign currency from an authorized dealer for your international vacation, a TCS of 5% will be applicable. Additionally, if you load a forex card with funds before your trip to utilize overseas, even then a 5% TCS rate will be applicable. But please note that TCS here will only be applicable if the transaction value exceeds rupees 7 lakhs. And in case you are using a debit card like the Neo Global debit card, TCS of 5% is applicable only above 7 lakh rupees, and this can be claimed and refunded while filing your income tax returns. But hey, if you use a Neo Global credit card or any other credit card, there is no TCS. Oh, and you should also know that the government has changed this rate from 5% to 20% effective starting from 1st October. So until then, the rate will be 5% only. Apart from Indian taxes, some countries may also charge a sales tax or VAT on your purchases. However, some countries like Australia, Canada, France, South Korea, UAE, UK, all EU member countries and many others allow you to claim a refund of the VAT while you are leaving the country. So make sure you understand the rules beforehand. Let's move on to the third type of charge, ATM withdrawal fees. When you withdraw money from an ATM using a debit card while traveling abroad, a withdrawal fee is imposed at a rate of up to 4% of the transaction value, on top of which GST will also be charged on the same. While on credit card, cash withdrawal is an entirely different deal and a very costly one at that. There are mainly three kinds of charges. Number 1, cash advance fee. Typically, this ranges from 2.5% to 3% of the transaction amount, subject to a minimum amount of rupees 250 to 500 and is reflected in the billing statement. Number 2, interest. Interest is charged on a monthly percentage rate, typically from 2.5% to 3.5% per month. So annually, this means somewhere around 25% to as high as 42% interest rates. Plus, unlike regular transactions, for cash withdrawals, there is no interest-free period. Charges start accruing from the day of the transaction till it's paid in full. Number 3. Late payment charges. If you do not repay the full amount, late repayment charges are applicable on the outstanding balance, and this could be anywhere from 15% to 30%. Oh, but by the way, you can avoid these charges when you withdraw cash from an ATM using Neo Global debit card at zero charges. Even when you use a Neo Global credit card, there is no interest or late payment fee. There is only one flat charge of 300 rupees plus GST on your cash withdrawal through the Neo Global credit card. Now, let's move on to the second part of the video. Ways to save money while traveling abroad. There are many ways to save money on international transactions while traveling abroad. Number 1. Use a debit card or credit card that does not charge you foreign transaction fees. There are a number of debit and credit cards that don't charge foreign transaction fees, so you can avoid these charges altogether. Number 2. Pay in local currency. If you're able to pay in the local currency, you'll usually save money on foreign transaction fees. Number 3. Shop around for the best exchange rate. If you are exchanging your Indian rupees for foreign currency, shop around for the best exchange rate. You can often get a better rate if you exchange your money at a bank or a currency exchange bureau rather than at the airports. Number 4. Use a mobile payment app. Mobile payment apps like Paytm and Google Pay can be a good way to save money on international transactions. These apps often offer better exchange rates than credit cards, and they can also be used to make payments at a variety of merchants. Like for example, recently countries like UAE, Singapore, Malaysia, France, Nepal, and some others have also adopted UPI. So if you're traveling to these countries, possibly now, you'll also be able to make payment via GPay or Paytm. By following these tips, I'm very sure you will be able to save a lot of money on international transactions while traveling abroad. And here are some additional tips from my personal experience. Number 1. Plan ahead. Before you travel, do your research and compare different options for exchanging currency and making payments. This will help you find the best way to save money and you won't be worried at the last minute. Number 2. Be aware of your fees. When you're making a transaction, be sure to ask about any fees that may apply. This includes foreign transaction fees, ATM fees, and currency conversion fees. Number 3. Use a credit card with travel benefits. Some credit cards offer travel benefits such as travel insurance and airport lounge access. These benefits can save you a lot of money on your trip. So that's it for this video, guys. I hope you learned something new today. My name is Jay Desai. Thank you for watching this video.